Good day, everybody. Brian here, quantlabsnet.com. About a week ago, in this case, 6 days ago, I put out the video, huge quant payday, $2.5 million for HFT jobs, quant research jobs, but the real wealth is in portfolio management. Generally, that's basically the consensus you'll get from this 5 hour plus video, but these jobs do exist. So then the next question is, first, I want to say thanks to the person that sent this to me. They know who they are. So thanks to them for sending this out. And let's get to this. So the highlight is a lot of articles I get are from efinancialcareers.com. I'd be talking about a lot more stuff, but you guys seem to like these type of big payday career jobs in this space. So, anyways, do you need a PhD for a quant job in finance? Only if you want to earn 2 million as a graduate. So as we all know, people want that type of payoff, but they don't want to, usually go beyond working for it. Except for those that go through the PhD level schools to earn themselves to that point. But apparently now there's a mixed story on that. So as you can see here, if you're applying for quant jobs at banks, hedge funds, prop traders, you'll find a PhD can help for some firms and a hindrance for others. When it comes to compensation, however, there's some debate among recruiters as to how valuable the PhD is. From my experience, a lot of people will not look at you unless you have at least a master's. Some will even specify you need a master's. From what I've seen from that 5 hour video and those jobs, the good thing about the PM, from what I saw, a lot of the jobs at that level, that high pay, do not require technology. It helps. They don't require a lot on specified education. What matters is the track record you bring to the table and how long you've been doing it and how profitable you have been. That's what I've seen. So that is the path for most of those that are not brainiacs coming out of the Ivy League schools. So we have here new breed firms like Jane Street. Uh, and I've posted a lot on my website blog. Both Jane Street and Citadel are the highest paying in this industry. Okay. So for Jane Street, PhD won't necessarily be a game changer. One quant headhunter speaking anonymously told us that firms like Jane Street prefer to hire undergraduates and have almost no PhD. So if you're coming in with just undergraduate, you could be just fine. Uh, Jane Street seems to endorse that sentiment in a video on its YouTube channel. One of the researchers said majority of researchers at Jane Street don't have PhDs. That is, from what I understand about Jane Street, they're a fairly scrappy um, firm with a bunch of trading desks, and they all compete against each other to get more allocation. That's pretty well out there. Also, they use OCaml as part of their technology and nothing but. So they're not a standard firm, but they're the best paying firm. So maybe they use an entrepreneurial spirit. I don't know. But if it works for them, it works for them. So hedge funds seem more appreciative of PhDs, as do banks. One is no guarantee of a job. However, a Goldman Sachs quant strat told us that getting a PhD actually hindered his job search because they can't justify the seniority. He had to go back to school and obtain an MFE before he could find a job in quant finance. So basically, that signals when you do the kind of job search in a 5 hour video, what that tells you is if you're junior coming in with a PhD, yes. But if you get an old fossil like me, what they're looking at yet again is trading experience, trading track record. And yes, they also want you to be a mathematician whiz. They want you to be basically a math whiz and an all-star, rock star, low-level trading C++ guru in Linux that knows how to hack apart the Linux kernel. So they want all that put together. And believe it or not, yes, people like that do exist. And a lot of them exist because they have the work ethic that these firms want and willing to pay. that don't sit and complain about their job and blah 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 blah. They just go out and do it. And a lot of them are young, and that's who they're after. And as I said before, out of those three skills I mentioned, trading experience will always be number one. You have to show that you're capable of being a master, quote unquote, trader with the experience and the third party verified trading account. That is without a doubt. You watch that trading 5 hour video, you'll know what I mean. So this guy, head of North American recruitment from Selby Jennings, told us back in 2021 that PhDs make you a far more marketable candidate, and that's true again at you know probably junior to mid level, and show that firm that won't need much hand holding that hires you. That is a very big time key. You're dropped into a seat on a trading desk, you better perform on the first assignments that's thrown at you. You don't have time to sit around and learn how the firm works and read all their training manuals. I think when they are paying very well, they expect you to perform right out of the gate. And at the same time, you'll be having to learn all their procedures at the same time. They are basically looking for very high performers with the PhD, but now from reading this, I would say the verify, that's key. Verify track record. Doesn't matter what you have on your GitHub anymore because there's fewer people. The jobs are there, but fewer people with the trading experience that's verify track record. I keep saying that. Trading firms averse to hiring PhDs would argue that the independence is a bad thing. James Holland, recruitment firm Quant Capital, wrote us recently saying that newer firms want to fit people into a mold that they create. Yes, and then they put on the gold shackles with the pay and having you only stay at that firm. Goldman Sachs was known to it with their proprietary language, and nowhere else can you obviously go to another firm with that technology experience. And that's probably Jane Street's strategy as well. Like you want this really good pay, and now we're uh, um, shackling you to the job because you want the paying job, but ha ha ha, we got you cornered. We only give you OCaml experience. So these are very important things you need to decide. Where do you go? If you're going into a firm as a junior with C++ experience, Python experience, that's a different matter. I've talked about yes, there are jobs in .NET. Yes, there are jobs in in .NET and Java for sure. But as I said, if you watch that video, that long 5 hour video I just posted 6 days ago, you'll see standard is you go from firm to firm to firm with little questions asked about your technology knowledge. Yeah, stay in the world of C++ and Python. All right, so and that also takes away this quote, want to fit people into a mold that they create. They want obviously people there in the long term on the long term. Uh, we don't hear a lot about Rentec, and there's a reason for it. Is because as more firms have become open on how they recruit, blah blah blah, with social media, Rentec takes the opposite approach, saying we are going to pay you very good money, put you on our fund, which is one of the best in the business, and they have people there for very long term, like decades plus. And then you never hear about them, who's going in that firm and who's coming out of that firm. And they're still one of the most well-known, well, secretive, but well-known and high-performing on the performance trading side that everybody's like, wow. Even though if they don't have Jim Simons at the helm anymore, because he's no longer with us. Okay, continuing along, a London quant firm founder speaking anonymously. Now, remember here, this is key. These are not people that are just going to speak out publicly because it's very secretive, very competitive in this market. Again, the 5 hour video that I just described that I put out shows that between New York and London specifically for the top talent and for the best pay. And the crumbs, well, those jobs are probably going to be in Hong Kong, Sydney, Australia, and elsewhere, Tokyo, let's say. So this company or founder, not speaking anonymous, told us it's specifically your degree or told us it's not specifically your degree level or even level of study that matters most. It's how academically competitive you are. Firms are looking at where you're studying, your GPA, what position in your cohort, graduate and extracurricular achievements. This is important to remember because a lot of these top graduates aren't doing this because basically they don't have the time. But once they get out looking for work, you need to be a champ at mathematic Olympiads and trading competitions. That makes sense, right? That's again part of your marketing strategy to get into these firms, along with if you're coming out of a top uh, Ivy League school. While top firms might have specific preferences, is true. The true thread is that these candidates are intellectually extraordinary. If you have not talked to people that are making millions of dollars in these firms or starting up their own firms, making millions of dollars, you don't understand how their mentality works. I've spoken to not a lot, but a very small select of people that are at this level. It is another world to enter into. These are the kind of firms that want these type of folks. They're out there, but they're not promoting themselves. Hey, look at me. I'm the best. Okay. They don't need to do that. And I'm referring to not just both the firms hiring, but also the candidates that they want. They can instantly find these people through their school, through the transcripts that are available, and blah, 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 blah. And you can't hide those sort of things because I've been through it. I've also been a little bit on the recruiting side. I put out an article on Waterloo when I went there. No, I didn't go to Waterloo, the school, university, but I did go out and try to compete with big tech firms back way back in the 90s, hiring these top grads. It's very hard from a firm. I mean, our firm was very good. We were probably one of probably the fastest growing firm and innovative firm in Canada, yet maybe even the world. But they just didn't pay, and the pay was the key. Anyways, that's back in my day of experience. And no, unfortunately, I don't share that experience because it's dinosaur ages ago. So also, if you have strong performance for where you want to work as a quant, multiple addition years of study, thousands in teaching fees might not sound too attractive. But the extra compensation when you finally graduate is worth it. Recruitment firm founders suggest not freshly minted PhDs are necessarily compensated higher than non PhD quants on the buy side. If a student is academically competitive at an elite level, the founders says they can earn anywhere from 300 to 500K to start. That's no crumbs to sniff at. You know what I mean? And that's also from a bachelor level. To be truthful, what I would do as an example here, look at a guy like John Fawcett. Just found out again on this site, and it's been confirmed. He started Quantopian. Uh, I don't know his level of education. I do know he started Quantopian, became legendary from that. Then he went to Robinhood Securities for 4 years. I mean, I have my opinions on that firm, but whatever. And now I think he's head of lead development or something like that, lead development at equities at Citadel Securities. So he's probably making in the millions. He's going to be able to, from that position, be able to move up if he performs to the firm's liking. He can move right up there into the higher level of Citadel upper management and do very, very well for himself all because he's built his brand. He's built himself out as a brand, showing the innovation that he put out with the platform Quantopian, and then probably some of the other stuff that he may have done at Robinhood. I don't know. But at the end of the day, he took that path, and he's now a lead head at Citadel. Again, one of the other highest paying firms. Did he have a PhD? Does he have a master's? I don't know. I'd be interested to find out. And to be honest, nor do I care. But if he's able to get into that high level position, good on him. Okay, another thing here is another quant headhunter based in London says not uncommon for graduates to get over 500K. Now, when they say if they're truly elite, what we're talking about is not just are they intellectually smart, are they technical gurus? We're talking about people that get into a job, come up with a trading idea and perform, and that trading idea gets implemented and performs. That's what we're talking about here. He says that top PhD quants earn the most, and we've verified that. Top quant graduates with bachelor degrees can earn up to 650 total compensation, while PhD earns closer to 850. Okay, so I know one candidate who had a doctorate and a few internships who earned 2 million in their first year in the States. Okay, so I don't. I mean, that sounds like an exception, but these numbers here at 650 and 850 for bachelor degree at 650 and PhDs at 850, that sounds about right. But again, let's talk about another option that's not being talked about here. So this is a headhunter told us. He also said that doctorate tend to be more get more compensation in the long run. From my perspective, I think that would be true if you are performing in your job. Okay, if you're not performing in your job in terms of trading ideas that get implemented and then actually perform and become very lucrative for a firm, those PhDs aren't going to go anywhere. Okay, because it's beyond just having a little set of alphabets on your business card, as they call it, the alphabet soup, or the accreditation with a CFA. You have to perform. You have to verify through your trading, independent trading, that you're capable of that. And as I said on this guy John Foss, on the technical front, on his capabilities, he has performed there. On the technical and on his entrepreneurial experience, he has performed. But let's talk about top trading positions in these firms that go into the millions. Again, I've talked about earlier. Don't need the education. It's not required, and it's not the technical is not there. What they want is that you know how to trade and be able to show that. That's what matters, and all the other things are secondary in terms of the math and the programming. It's very, very secondary. If you can show in these, let's say, Jane Street prop firms that you can perform and it's verified, they will want to talk to you, and you will get a starting salary of about 1 million. And I've seen this up to $2.5 million. How do I know that? Again, that is all proven on a snapshot of 6 days ago of all the jobs that were available, all the high paying jobs over 450, 500,000 in both the UK and the US. And that was what I saw. The highest paying were portfolio managers. That's why I'm hammering more on that than anything else now. Because anybody that is able to perform without the education, without the technical, can get there. But you got to be best or basically top of class in both, even if you don't have the education. That is what I'm saying here. And this is somewhat in line, but they only focus if you have the PhD and the master's level. If you really want to perform, you get this stuff for your resume, but that's just to get entry into the door and entry into the interview. No different than with what I felt when I went out in early 90s, going out to get a job. To get a job, you had to get a bachelor's degree to get looked at by companies. All these people that sit there and saying education is not important, you don't need a university degree, are lying to you. Okay, a lot of firms, a lot of trading firms will not even look at you unless you have a minimum bachelor degree. And now I'm seeing job descriptions needing minimum now a master's degree. Okay, but not saying you need that requirement, but to get looked at and be considered, you have to have a master's degree. Unless you got a brand, you got this well-known experience like John Foss, as I mentioned, being able to get the attention of not only but pretty well the premier trading firm on the planet, Citadel Securities, that do pay top dollars. So it can be done. But in order, if you're just like, oh, I hate saying this, average Joe, but with the intellect of a quant person and the high performing math, technical, all that, you gotta have most likely a master's. But if you got the training experience already in a firm or set of firms, PhD doesn't matter. But if you're coming from the bottom up, like graduate, in a junior level, you definitely need a PhD for sure. Just depends upon what point of view you're looking at this article and what view are you coming from. Are you coming from 20, let's say 15, 20 years of working experience? Do you need a PhD? No. But as I said, if you know how to perform, you got the verified track record, yes. Yes, yes. This article is valid. But as it did mention, if you're coming up from a junior level, I do think you need to have a PhD. We'll leave it at that, and then people go, well, Brian, that's all fine and good. How do I get this from an independent point of view? How do I get into learning this stuff? And this is where I test you, and you need to test yourself. On my store at quantlabsnet.com, just being brutally honest, if you want to get into this stuff, you got to know futures and options. You got to trade this stuff. You got to know how to do it like HFT firms, like hedge funds and quant. Again, if you go into this article, this 5 hour video, the other reason I did this video was to understand what are they trading. Not a lot of these coding messiahs on YouTube talk about that. What is being traded? That is so critical if you want these type of jobs. But uh, you can watch this video, understand what I'm talking about. You can watch that 5 hour video for what I'm talking about. But you'll quickly understand from the job descriptions, you need to know futures and options. That's why I put this article out or this video, this product out here for $30. And I go beyond that now. And I'm now actually taking what you learn here and making a trading system, all thanks to AI. So that is proof in the pudding. You want to get better. You got to think like these folks, the pros, the smart money, and be able to forecast what's happening in the markets, not chase returns. If you're chasing returns, you are not trading. You're just doing what every other technical analysis that will argue to the teeth that all they do is they give profit and take back profit. Because there are technical analysts or chartists or whatnot doing okay, but the real traders that are successful that do this time and day out for years on end throughout their entire career, where they will continue to profit and profit in the bad times, not in the momentum that we've had for the last 10 plus years. The traders that are in a losing economy, in a losing trading set of conditions, and they're able to profit. I hate to, to bury the hatchet for a lot of people if they are profitable. If they are profitable in bad economies and they're very profitable in negative trading environments, they are the best traders in the world. And those are the type of traders with verified track records that these firms want. And that, again, know how to do the coding, know how to do the math as well, and especially know how to do the futures and options as well. So you want to get in on this, okay? And this starts to hopefully prove itself over the next few weeks. Don't expect it to be at the low price that it is, because it won't. I'll leave it at that. If you want to know more, just go over to the Learn tab at the website, quantlabsnet.com. I'll put the description with this, and you can get yourself a free C++ book, ebook on everything what the trading firms use in C++, among other books as well. Thank you for watching, and have yourselves a good day. Over and out.